Alright, hi guys. This is Nate Carden. Let's get moving, why don't we? So, this is week 04 Quiz Access, chapter 2. And let's jump right into the question. So, we've got use the following information for exercises 25 to 27 below. Carmen Camry operates a consulting firm called Help Today, which began operations on December 1st. On December 31st, the company's records show the following selected accounts and amounts for the month of December. And here we have all the different accounts and amounts. And we're going to go through questions 11, 12, and 13. So we're going to start off with the income statement, and then the statement of returned earnings, and then the balance sheet. And those are in that order for a specific reason. We need some information, the net income from the income statement for the retained earnings, and then we need some information from the retained earnings for the balance sheet. So let's start off with this. In this first box, we're going to see as of December 31st, or for month ended December 31st. If this was a balance sheet, it would be a single date, but because this is the income statement for the month of December, we're going to do month ended December 31st. And in an income sheet, you're always going to have revenues, revenues, and then expenses, and let's look and see if we can find any revenues here. So I'm seeing consulting revenue. Let's fill out this box. It's going to be revenues first. And we're only going to have consulting revenues this month. Consulting revenue. Fill that out. It is 26,970. Whoops. Let's see if we can do this right the first time. And now we're going to have expenses, which are down here. And let's take a look at all the expenses we have. So we're going to have the rent expense, the salaries expense, the telephone expense, and the miscellaneous expenses. Let's go and fill those out quick. Telephone expense, miscellaneous expense, and we've got 9510, expenses 5580, telephone expense is 840 and 490. Then I guess down at the bottom it already auto-populates this total expenses. And now we're going to need to find the net income for the retained earnings sheet that we're about to do. So if we see what income is, it's going to be revenues minus expenses. So that's pretty simple. It's 26,970 minus 16,420. Let's put that in the calculator. It's going to be 10,550. That's pretty self-explanatory. Shoot me a question if you need anything for that, but let's check our work first. Make sure. Okay, answer is complete and correct. Let's move on to the next question. And I had a joke as well to kind of break up the monotony of it. It was really hard to find an accounting joke that wasn't really bad. But So what kind of betting does an accountant have? Balance sheets. The fact that there's not many accounting jokes that are very laughable is kind of a joke in itself. Of some people think accounting's pretty boring. Okay, anyways, statement of retained earnings. Let's get that out of the way. So, we're gonna do this one again. It's not a balance sheet, so it's gonna be for the month ended December 31st. And the retained earnings. How are we gonna do this? So let's look up retained earnings, see if I can get any example. So retained earnings are the amount of profit a company has left over after paying all of its direct costs, indirect costs, income taxes, and its dividends to shareholders. So it's going to be plus or minus the net income or net loss to previous retained earnings minus the dividends. So what that means is we are going to add net income and subtract dividends, and that will give us the retained earnings as of December 31st. So let's add net income less dividends. It's going to be adding income or net income, because if you remember our first example, it's a positive number. So this one's pretty simple as well. I'm just going to go add that net income from last time. How many dividends did we pay out to the shareholders? It is going to be 5,960, and it automatically does the math for us. Let's check our answer. I almost said boom, but okay. Answer is completely incorrect. Now let's go on to the balance sheet, the final answer, or the final sheet. So I already wrote the equation down here, but this is the accounting equation. It's, I can't point with my finger. It's oh, you guys can't see that, can you? Hopefully my face wasn't getting in the way. Alright, let's scroll up. Alright, there we go. Assets equals liabilities plus equity. Let's go to the accounting equation. Assets equals liabilities plus equity. And this is an extended version right here. Basically, what's that saying? What's that saying? What that is saying is this side of the equation's going to be the assets, and it's going to be equivalent to the liabilities and equity. So balance sheet, what are we going to have for the date? As of December 31st. Because it's not a process. It's not from the 1st to the 31st. This is as of the 31st. What's on our balance sheet? What does this company own? So assets is going to be equal to liabilities plus equity. What is an asset? We have cash, accounts receivable, equipment. It's going to be supplies as well. So let's go through and do this. We got cash. We got accounts receivable, whereas accounts payable would be on this side under the liabilities, which we can already put in there. Accounts payable is a liability, accounts receivable is an asset. Money we're going to get, money we're going to pay. We have office supplies, office equipment, and last but not least we have land. Let's fill in those numbers. 25, 0. 5210. 19970 and 43,980. Accounts payable. It's going to be 10,730 that we're going to have to pay. And now equity. What is equity? Let's check it out. Portion of a property's value that is an individual owns. It's net assets. It's going to be assets minus liabilities, so equity is going to be equivalent to all of these minus this. So it looks like it's going to be a pretty big number, and it has to be a pretty big number because we have 116,000 here and only 10,000 here. It's going to have to be over $100,000. So let's see. It consists of common stock. That's already over $100,000. Stock 101,500. And we need the retained earnings because that's what we had. Or that's why we did those in that order. We're going to have to go back. Let's copy that retained earnings over. Retained earnings. Didn't copy very well, but looks like 4,950. Okay. And looks like I made a mistake somewhere. Oh, 4,590. We got assets equals liabilities plus equity. If you're confused about retained earnings again, let's look at that. It's the amount of profit a company has left over after paying all its direct costs, including income taxes and its dividends to shareholders. This is what earnings are retained after everything, and those can be paid out as bonuses. Those can be, it's leftover money, retained earnings, and it's part of equity, which is the liquid value of a company minus any applicable debt or liability, or the portion of a property that the shareholders own, the owners own. We should probably check it. Let's see. So I messed up. Let's see. Oh, that's a pretty easy fix. Let's return the question. I just forgot to put in here total assets and total liabilities and equity. Total assets equals total liability and equity. Those two numbers are equivalent. That should be correct, but for some reason I can't check my answer. Let's see if I can check my answer again. Alright, I'll edit the video so it does show correct. That's unfortunate. You know what? I could just do this. I've already done this before, and I have the answers over here, just so I could quickly figure out the answer if it was correct or incorrect. Whoa, guys, we got it right. Alright. Well, thank you for joining me on this accounting adventure today. Whoever said accounting was boring, I don't know. Alright, this is it, guys. Goodbye. Any questions, please post below.